This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin. That's little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Michael Casey, filling in for Christine Lee all this week. So, looking at our top stories today, first up, ransomware hacking group Revel interrupted the networks of at least 200 US businesses on Friday, and is now demanding $70 million in Bitcoin. This is the same Russia-based outfit that attacked the Colonial Pipeline and meat producer JBS Holdings. Barclays yesterday stopped card payments to Binance following the Financial Conduct Authority's warning that the crypto exchange should not be operating in the UK. In response, Binance said the bank's moves are based on a, quote, inaccurate understanding of events. It's the latest regulation-related challenge to Binance, which has come under increased scrutiny from regulators around the world. And lastly, a survey of institutional investors and wealth managers showed that 82% expect to increase their exposure to cryptocurrencies and digital assets between now and 2023. Nickel Digital Asset Management conducted the survey in the United States, France, Germany, and the United Arab Emirates. The company noted that most institutional investors with holdings in Bitcoin and other crypto currently have very low exposure as they test the market to see how it works. So checking in on Bitcoin, the current Bitcoin price XPX index is now trading at 33,783.17 cents. That's down 0.75% on the day.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
So as we can see in this technical analysis chart, Bitcoin is holding support above $33,000. Initial resistance is now seen at $36,000 as short-term buyers continue to take profits. Bitcoin had a choppy trading session during Asian hours as China's central bank closed down a Beijing-based company providing software services for crypto transactions and reiterated that no institution under its jurisdiction should engage in such transactions. Bitcoin was at about 35,000 when that news came in, and it started to fall fairly quickly after that news. So joining us now to discuss the Bitcoin markets is Steve McClurg, CIO and co-founder of Valkyrie. Welcome, Steve.
Hi, thank you very much for having me.
So, it's been a little dull of late. Range bound is the word that keeps coming up, a bit of interest overnight, but for the most part, we seem to be stuck in this pattern. Do you see this continuing for a while, or is there a breakout somewhere along the way?
Yeah, as far as Bitcoin goes, I definitely see us stuck here over the summer. The famous saying, sell in May and go away, come back again St. Ledger's Day, I think is going to apply to Bitcoin this session. You've got a little bit of exhaustion from buyers at the moment, and we probably won't see that pick back up until after Labor Day, when institutional markets tend to come back with full force and liquidity into the markets.
So, let's look a bit further forward then, and the big thesis that we've often had, and certainly the one that was driving us before we get to this space was inflation. And I'm just picking up here on a tweet that you posted over the weekend where you flagged comments by Larry Summers. And you said he had said the surge in US house prices is scary. Can you just break down your thinking on this? What do you see? Are we talking here about inflation being transitory, as the Fed seems to suggest it is, something to do with this movement out of COVID? Or is it a more entrenched inflationary trend to which the Treasury Secretary was suggesting?
Yeah, what I'm seeing is inflation is certainly here to stay. It's definitely not transitory. And really what is creating inflation this time is two things. It is increase in monetary supply, but it's also increase in wages. And that was something that we didn't have 10 years ago when the Fed began to print unprecedented amounts of money. And that also applies, by the way, to other central banks as well. Wages stayed stagnant during that time, which is why we didn't see inflation then. And what we're seeing over the last year and what we're going to continue to see is wage increases. During COVID, the US and many other governments around the world not only printed money but also subsidized people's income with checks, sometimes larger than the amount that they were making. And people just aren't willing to come back to work unless there is a level of pay that's equal to or greater than the amount that they were making during COVID. So we expect to see wage growth continue. We expect to see other stimulus packages come into the market in many different forms. So we not only expect to see things like housing and materials to build houses and other assets, we also expect to see Bitcoin rise on those inflation scares as well.
But how good of a inflation hedge is Bitcoin at this stage proving to be? I mean, on a short-term basis, at least, it seems to behave more in response to expectations for risk assets generally, and obviously the Fed's monetary support is a part of that. But on a month-by-month basis, how it responds to CPI data and so forth, I'm not so certain that it's responding. I mean, how do you define this notion of Bitcoin as an inflation hedge?
Yeah, so you're right, by the way, that Bitcoin has reflected risk assets more than any other types of correlation in the market. But inflation is also a factor as well, as are all risk assets, whether it's equities, whether it's private equity, whether it's housing, other hard assets, art, wine. But Bitcoin, due to its limited supply, due to its actual use as a monetary currency in many places globally, and that trend is growing, we should begin to see it move with inflation along with other risk assets.
So another factor that's been discussed a little bit of late is the moves in the hash rate, specifically as it has been affected by China's crackdown on miners there, and mining operations now being relocated to Canada and so forth, and the US. I mean, is this affecting your outlook for Bitcoin's price?
Yeah, what it's doing is actually making people a lot more excited about mining. Established miners, due to the hash rate decreasing by over 50%, and of course the difficulty dropping pretty significantly over the weekend, miners are making a lot more in revenue than they would, and regardless of how much power they're using, the profits are certainly there, even at the price of Bitcoin being half of its all-time highs. So we are seeing a lot more excitement in the mining space, whether it's in Canada, like you mentioned. Texas has become a very big place to mine as well, off of the independent energy grid there, as well as other locations around the world. So it's actually really good for the ecosystem to move a lot of these miners out of China and make them a little bit more decentralized in countries around the world.
All right, Steve, that's all we have time for now. That was Stephen McClurg of Valkyrie. Thank you very much for joining us.
Thank you very much for having me.
Coming up, a discussion about clean energy and mining. Our next guest is a proponent of the idea that Bitcoin mining can not only use clean energy, but actually accelerate the development of renewable power in the wider economy. and he's setting out to prove it. His company procures renewable energy to supply a portfolio of Bitcoin mining facilities. Joining me now is Grid Infrastructure Vice President of Strategy, Harry Sudok. Welcome, Harry.
Thank you, Michael. Great to be with you.
Yep. So first of all, let's tell our viewers what it is that Grid actually does and how that relates to making Bitcoin greener.
Yeah, so Grid Infrastructure is a large-scale industrial vertically integrated Bitcoin miner. We use our operations here in the U.S. And we prioritize sourcing carbon-free power wherever possible. And so what that's led to historically for us is that, we have an overwhelmingly carbon-free and renewable-focused portfolio, not because we have an ESG mandate, but because that's the way that we achieve the best results for our business.
Yeah, but we discussed this somewhat when we had you on our Money Reimagined podcast a few months back. And you talked then of how wind farms and other independent renewable energy producers were reaching out to Grid to set up mining operations, as you had put it, to produce guaranteed revenues that could essentially underwrite their development. I'm just wondering whether, what you're seeing now, because, since then we've heard about this mass migration of mining to North America after China's crackdown. What impact is that having on your operations, and is this something that is driving us toward more renewables or something else?
Yeah, so I think that if you look at the short-term game that's being played, specifically by the miners that are migrating out of China, I think that they're pretty much energy source agnostic. And they're just looking for megawatts and rack space to plug their hardware into. And while we're not thrilled with that reality, we think that over time, hardware migrates to the lowest cost power, and that migration is going to happen, across the fleet that's moving here now. That lowest cost power is renewable, is carbon free, and is going to be, the core of Bitcoin mining, block production, certainly for the foreseeable future. From our perspective, it's just a massive opportunity. We've been prioritizing the energy relationships above basically every other business activity that we engage in. And so, because we've prioritized those energy relationships, we're going to be able to achieve, ongoing better unit economics with hardware availability, with, demand and supply being so mismatched by the great Chinese migration. But, for us, it's a really exciting time to be mining in the US. We love our renewable focused portfolio. We love our pipeline. And we think that if anything, it's just going to pull some growth that used to be further out. It's going to pull it a little bit nearer term for us. But I think that, the demand profile for the folks coming from China is much more energy agnostic, whereas we are focused on a longer term game, which puts carbon free forward.
Right, but we've got what it was 117 degrees Fahrenheit in British Columbia the other day, a certain, recognition that we have a global climate crisis. And you mentioned miners being sort of source agnostic. Do you think it's enough just to, see that people are going to eventually organically move to this? As you said, renewables is supposed to be at least the lowest cost source of energy. Or do we need policymakers? Is there a place for sort of specific policy-driven incentives to actually accelerate this shift?
I think that the place to make a real impact is around energy availability and reliability. The first mission of Slater is to ensure as a quality of life as their constituent can achieve. And the core of achieving that incredibly high quality of life with minimized externality is making sure that the appliances run the way they're supposed to. The manufacturing jobs can be in their region because you need reliable energy to run a car plant, for instance. The burden on the legislators is to make sure that the energy grid is highly performative, highly reliable, and highly abundant, with resources that minimize impact, which means renewables, which means resources. So the view that the legislator's job is to make sure that there's high energy availability, rather than saying, Bitcoin miners aren't allowed to use energy. We're just not a big enough part of the pie where that type of specific legislation makes sense.
So, but where it perhaps could be is having policymakers, and it's really not about Bitcoin miners. It's literally energy policymakers focus on the value of a decentralized structure. The attack on the Colonial Pipeline to me was an attack on a centralized system. There was one vector of attack, and a more decentralized microgrid system is arguably more secure than one that is dependent upon these singular things. Is there any conversation going on around that? Are energy policymakers interested at all in working with you guys and others in redesigning the grid to have that insurance of supply that you were talking about?
Yeah, I wish that they were more proactive. We welcome any call from any side of any aisle in the areas that we operate for sure. I think that we're still in the education phase where it's never well understood broadly yet how energy grids function and why reliability is such a piece of the performance puzzle. So I think people are very much focused on sort of what generates the energy, and they're much less focused on what quality of life does that energy deliver. So I think when we can shift the conversation towards the latter, conversations around carbon-free abundance get a lot easier. So there's exciting work being done with fourth generation nuclear reactors. There's exciting development happening around flared gas and Bitcoin mining there. There's exciting work being done around hydroelectric power, wind and solar, to a somewhat lesser degree around reliability. But I think the conversation really needs to be around what does a thriving community and economy look like, and how do we achieve that highly aspirational vision in a impact minimized fashion.
All right. Well, thank you, Harry. That's all we have time for, unfortunately. That was Harry Sudok of Grid Infrastructure. And that's it for All About Bitcoin. I'm Michael Casey. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV. Bye for now.